Good morning, folks. Andrew Schartenberg here, your friendly neighborhood mortgage engineer. Today is Thursday, January 13th, and I'm here with your rate report and home buyer tip of the day. I apologize for not being with you guys yesterday. Most of the Northeast was blanketed in about a foot of snow, and things kind of ground to a halt, but we're back at it strong today. So where do rates stand today? That is the question on everybody's mind, and it's kind of an interesting spot we find ourselves in. Today, we're pretty much unchanged with conventional Fannie Mae, Freddie Mac, 30-year fixed loans, perfect scenarios. We're talking rates of, on the average, about 4.75%, which is where we've been holding steady. And on FHA and VA government loans, we're looking at about 4.5%. So that's right about where we've been hovering for the last week or so. And we are in the latter part of the week now, so we've had some economic data come out. We've had some treasury auctions, and things are not exactly what they seem. So what's happened so far this week? Well, yesterday we had the 10-year Treasury note auction. There was a lot of demand in that auction, and when you see demand in the 10-year Treasury note auctions, when you see strong demand, typically that's going to spark a decrease in mortgage prices and mortgage rates. So that's one factor. Another factor is that the producer price index came out today, which is a measure of inflation in the producer segment of the economy, so manufacturing essentially. And while core inflation remained it actually declined from 0.3% to 0.2% in a jump, we really saw headline inflation increase unexpectedly. So that means that we're seeing more inflation. Inflation is the nemesis of mortgage rates. So, but again, that's just another factor in our analysis here. Really, the inflation is tied to rising commodity prices for food costs and energy prices. Obviously, we've seen the price at the pump for gasoline go up quite a bit recently. Unexpectedly, we saw jobless claims go up from what the consensus was at around 405,000 to an actual number of 445,000. So that's a pretty big jump from what analysts expected. Now, as you guys, if you've been following my rate reports, will know, I foresaw this and really kind of think the employment situation is not very good, and I'm not surprised by that number. But again, the markets are a little surprised by that number. Treasuries, the 10-year Treasury note yield, which is something that we look at every day to see where mortgage prices are going, remains relatively flat. And I think that right now the markets are a little bit confused. Investors are a little confused. We're seeing that people want to move their money into bonds, but with the inflation, it's throwing everybody for a loop. We're going to see the 30-year Treasury note auction today, and we could be setting the ground for a little bit of a decrease in mortgage rates. But I think that we're going to need to continue to see negative data come out over the next week or two to continue to support that, and we'll see where we go from there. So today, those are where our rates are. So for the home buyer tip of the day, we're going to talk about title insurance today. Title insurance, what is it? It's a one-time policy which is going to protect the ownership interest in your house. It's going to protect the deed to your house, essentially. What it does is it protects against errors and omissions made when the title search to the home is performed. So when they do the title search, they're looking for a couple things. They're looking for the municipal taxes, so the real estate taxes on the property. Are they up to date? Are there any back taxes owed? How far back do they go? We're also looking for any liens against the property. So is there a mortgage on the property? Has somebody not paid someone that did work to the house and that person put a lien against the house? There's a lot of different ways to put a lien against the house. And lastly, we're looking at the chain of ownership on the property. Has it transferred correctly every time that the house has changed hands? So an attorney may do that, a title company may do that, a title examiner may do that, depending on what state you're in. Rhode Island, a lot of the time, it's either going to be a title examiner or a title attorney doing this. What we're protecting against is in case they make any errors or don't catch something, or in case something that is legitimate was just not filed correctly at the town or city hall where that title search is being done. So this insurance policy protects against that kind of stuff. Whenever you obtain a mortgage, whether you're buying a house or refinancing a house, you have to have title insurance to cover the mortgage. That's called the lender's title insurance policy, and it is a declining balance policy. That means that as the balance of the mortgage goes down, the coverage of the policy goes down. So anytime a claim was made against the property, in the event that it was, and it was legitimate, that title insurance policy would pay off the mortgage if it went that far. When you purchase a property, typically you will usually be recommended to purchase an owner's title insurance policy. This is not going to usually be the case when you refinance, because you probably already bought the title policy for yourself when you initially purchased the property. But when you buy a piece of property, you're going to buy an owner's policy, and that protects the equity that you build up in the house. Now, it doesn't protect for appreciation. So if you buy a house for $100,000 and you put down $20,000, your policy is going to protect that $20,000 or any equity you build up from the difference of $100,000 to whatever the balance of the mortgage is at any given point in time. So as you pay it down, maybe the balance of your mortgage is $50,000 at some point in the future, and there's a claim made. Your $50,000 from the difference between 100, which was your purchase price, and the 50 that's owed is protected by your owner's policy of title insurance. If the house appreciates in value and it becomes worth $200,000, we're not going to be protecting that portion, but at least you'll protect the money that you put in and initially as a down payment and have paid down on the mortgage. So it's always a good idea to buy the owner's policy of title insurance when you purchase a house. Lastly, how do we calculate this? Every state is different, but typically in Rhode Island, and I'm talking about Rhode Island because that's where I'm based and most of my clients and referral partners are based, we calculate title insurance at a rate of $2.50 per thousand of the loan amount for the lender's policy of title insurance and $3.50 per thousand of the loan amount for a combined policy if you're buying lenders and owners at the same time. So what I mean by that is, say you are refinancing your property and you have a $100,000 loan amount. You would divide that $100,000 by 1,000, which gives you a number of 100, and you multiply that by 2.5, which gives you $250, and that would be the amount of the title insurance policy to cover the new mortgage. When you buy that same house, you are going to multiply the purchase price of the house by 3.5 after dividing by the 1,000, so you would have a total policy of $350, 250 of which is that lender's policy, and $100 of which protects your equity in the owner's policy. Talk to your mortgage professionals, your real estate attorneys. Most of your realtors will know how to do this, and it's just one more component of your closing costs. It is usually the biggest portion of the legal and attorney fees that you're going to be faced with. And a lot of people will think that it's a scam, but unfortunately it's not. Most of the time you're not going to have an issue, and hopefully the title searches have been done correctly and nothing will ever come of it. But just like any kind of insurance, you want it there when there is an issue, and any attorney, any good attorney will be able to tell you horror stories about people that have run into stuff that you never would have foreseen coming. That could potentially make you lose your house or be sued in the future. So that's all for today, folks. If you ever need to reach me, it's Andrew@otfunding.com. Thanks.